to review what happened on Tuesday, July 9th. Quite a beautiful day as well, and with some experience, you can expect this type of PlayStation thing that happened here, which was actually a copy of a day that occurred at the beginning of the year. I'll see if I can find it here, so you can see that it's very similar to this one here. If I remember correctly, this was already a rejection at historical highs. But what's in this context is something that happens a lot of times. The market comes from a strong bullish momentum, quite linear, at historical highs. But notice at what time all this happens. It accumulates in Asia. In London it makes a range over there, near historical highs. And what the price does here already in New York hours is it reaches the open and swipes this. And there is a rejection. But what is particular about this is it was also right before a piece of news. This was a PSE index, if I'm not mistaken, which is more data related to inflation, if my memory serves me right. And what do we have the next day after what happened today? We have CPI then. So there's always an issue of positioning, how they tend to leave their market before a special piece of news, especially after these moves, especially if we are at historical highs. This kind of price action happens right on the day before. This tends to be very repetitive. A day or days before a report, this kind of price action tends to occur until the report is out. They tend to leave the price at an optimal point for whatever direction the market will take when the report is out. And that's it. That day the report was released. This shot up, and around here, there was 50% left unmitigated from the structure change. A shorter time frame came to the point to touch it, and it went down to the origin that was left unmitigated because of the news. 30% to the point, and then this happened. This happens a lot already. You can tell it's Asia when they do these kinds of things. In fact, they did something similar here with the price as well. Look here, being at the highs, the market closes, and then look here, well, the next day and look the following day. Isn't that a very similar pattern? This is known as the M of in Hay City, and it's used to create a weekly profile and have some sort of bias. But in YTFX we don't use any of that, although it's good experience to have. So it gave me an excellent indicator to have an idea of what might be happening with this today. So let's review it well. Similar to the previous review from around here, which had left us with Asia and London beginning a down movement, then an upward one, a certain origin. So here identical in the price. Remove this, and it starts to fall. What did I have here again? A beginning. The price had dropped with a wick. Introduced the responsible fractal, a tiny one that was around here in seconds. Actually, it catches my attention more when there are opposite candles and everything to take them as responsible. Which also gave a quick 10-point scalp here. This movement gave 10 quick points. At that 50, this 30 presided over the strong upwards movement. So nothing. The opening reaches highs, the price starts to fall, it gives a candlestick pattern here with this low, it takes this low. So a flip candlestick structure pattern, however you want to see it, it took this, returned to 50 and started to go well. And we reached the origin generated during the opening. The opening zone here had a small origin, which was used by the opening for what? To return to it and leave. So the price here swiped that first up, and from this little pinch in seconds, it made the double bottom and tried to distribute it. But what happens then, when the price reaches the limit of a high or low, and we have this failure in breaking it? What happens when the price returns to the nearest fractal and it's not a momentum, but instead starts to go against it? That displacement law can also be interpreted as a type of rejection. Then it comes and takes everything out, touches 30% of this origin, and then there's a very strong upward movement. Took out the hike of the last bearish candle. It can be taken as a candle pattern when the candles are flat like this. That's like the first target, where the price went back here and it went super fast. And here is where it gets interesting. It rejects the price multiple times, and at the same time, we have over here so with this, I think I was taking the previous contract up to taking the contract. Then the data didn't match up. So what happens at this time? Here, where the price is rejecting this candle, this same 10 o'clock candle, between 10:10 and 12 and took Nasdaq high. He didn't take it out in the S. So there is a divergence there that I like, that confluence of moments, especially in a terrain of all-time highs, where we don't have much more data to work with on the left. It can be a very good confirmation. There's a price magnet below. There's still this unmitigated responsible. That was 50. We have reasons to go down. So in seconds, I was left waiting for those who were watching price action. And there was a responsible fractal, and the price went back to it, and they started making a bunch of floors, 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 and I had the bearish idea, but I didn't want to play against that responsible, so I was waiting for the break of it. The price broke it, made a small pullback, and went immediately, and it did go all the way. And even bringing this up gave the reaction of 10 points that I mention here. It barely touched 50% of this and kept falling. Well then, what do we have now that we took the swing out? The high time frame swing, the lowest point of this entire range, of this entire structure. We even took it out with the body. Where does our responsible point remain? Because this is an area that is not part of the structure. This is generated after the swing is broken. This is not a responsible point. And that is the first area that the price usually takes when it is coming back to return to the previous range. Well, so be careful with these areas that are generated after breaking the swings. So the price was boosted from this small area that remained here without mitigating in yesterday's Asian opening, became this area. Before starting to rise, it touched the 30, rose, did nothing significant, and fell again, taking us out that area. And now arriving at this other small one that was down here. It touches again and starts forming a candle pattern, takes out this high, and starts moving up. Okay, look, here, it takes the area of swing. This area is not useful to me either as a manager or as an area to consider a structural change. Many times this area creates a trap in both directions, so be careful with that. I cannot lose track of where the price is on the higher time frame at this moment. So, right, this arrives on the much higher time frame. The entire range would be the shift in structure. Here is its 50, and on the current 1 minute time frame, we'd have this, where it didn't touch the 50 at all, but it had already reached the manager's area, which is a good stop loss. Look, it's not even 10 points from there. And it had already extended 15 minutes into the whole area, and from there, you start to get an idea of what's going to happen by reading the order flow. Let's see it with the candlesticks. Then what is happening over here? The price takes this out. So what is this that we have here? The responsible person. That's right. This is the responsible person. The price returned to him is 30%, and starting from him, it was mitigated. This responsible person varies from here. Rejections began, and the price started to drop, and it takes out the price and takes out this wolf from me. But additionally, it takes out this area, which starts to give me confidence to go short. Because we abandoned this area, the price returned to it and left. So this in a way indicates to me that the things that were working and were validated by order flow are no longer giving me any reaction. They are no longer giving me like that double bottom edge pattern. But if we reach 50, the responsible person who was still good, and we also had the 30% of this temporary flip here, so there's a confluence. It gave a decent scalp, but where did this reach? So what is this fractal here? If this movement was linear to the downside and it dropped straight, it means there's a fractal responsible for taking out an order flow area. Therefore, it becomes a responsible element that has more importance than a simple responsible element. Because there's an area that it broke, and now it gives me an indication that there are a greater number of sell orders that are counteracting the buyers here. So the price now tries to form a double bottom from this responsible element. And this is where one starts to want to confirm the price. The price is very ready. The price is seen, and it is then necessary that we start to take this out, and this tab, and this double bottom. They arrive, fail to break it, can't open that door. They don't open it. On the contrary, we start distributing from it. The candle pattern is already being made here with wicks. Take out the low. Pull back to the flip. It goes. It wiki the responsible one. A previous fractal arrives here. It starts making pullbacks. Goes back to the previous fractal. area where there's also imbalance. So one starts to put these things together as they function. What is working in favor of the longer temporality, where the order flow starts to change, what the price is telling me in favor of what it is acting on, and everything becomes much simpler. Because many people sometimes have the mania of seeing that they blind themselves, wanting to search for longs. And what happens is that the price reaches a bullish flip. Let's put this high here. It reaches this bullish flip. And watch out for this. Watch out for this. What people start to do is that the price makes a push but doesn't take out the ignition. A structure break. We see this here. It's not funny. If it were the first up, it doesn't take out the high. Therefore, it is failing to give a continuation. Then it starts to fall. It fails again, starts falling, and they remain fixed on looking for longs when they don't understand that the price already broke the bullish pivot that tried to give the reaction. It closed below the pivot, leaves a pivot area, breaks that pivot, and the price is already reaching where they want to keep buying again, and it gives them the pullback to that pivot, and again, it takes it, and the price is not indicating that it wants to make new highs, and they remain blind in looking for buys. So on the contrary, when the price does something like this, price comes to the area, makes a new high, then suddenly comes and does this kind of thing around here, takes out this low. Now, if it hits the 50, again, shows me a new high, forms a small pivot from taking out this high around here and starts making highs. And it comes back and makes a second touch in this area, which already gave me a continuation, and it starts to look like this. And this is inducing sales, sales, sales. But each time it's making higher highs, and this increasingly looks like a bullish trap. So read what the price is telling you. Don't stick to something and go along with it. Understand the order flow and the positioning from where to where it's heading is. So alright, here we reject. Removing this responsible one, it is assumed that the responsible one has to be respected when they are in favor of an idea, and the fact that we break it no longer generates bullish confidence. So fine, we return to the area from which that break was caused. An immediate pullback, it consolidates a bit in this imbalance and in the 50 of this area, and now we continue to the origin where the flip was. Small pullback, small reaction again. Notice that the system is very permissive and gives reactions. But despite being scalpers, if you take reactions, I want you to understand the why of things. It reaches the origin again, comes here, tries to get out of here, but again, doesn't succeed, and we end up falling. Well, now, around here, we start reaching the area that contains this other one here, which theoretically was unmitigated since we abandoned its hype. Our theories on mitigating, and all this would be like that accumulation equivalent to a responsible one. We started reaching that area over here when we saw that we hadn't reached 50. I continued with a bearish bias, but still, it gave a good pattern here of a double bottom. But then, let's start again by analyzing how everything is happening and what the price is doing here. Rejects properly. Upon rejection, it gives us that possibility of a pullback to the previous range to make another attempt at continuation. So look here at what the price does. It takes out these highs, rejecting, comes and takes the low if we were very, very bearish. I like this, the necessary reaction. On the contrary, it fails to make a new low and starts to carry it away. So over here there is an ascending, evidently a hidden ascending, because of the wicks. Remember that a hidden ascending occurs when there are these reactions, and from there a continuation is left. So look at what I was telling you. Price from an area from where there is a flip, it's giving me a top and a continuation. Then the price that comes and makes me the double bottom is making new highs, new highs, new highs, new highs, and starts to look like a trend line. Besides, let's not lose sight of the higher time frame. In the higher time frame, the price that is showing me is giving me an area. It's taking it out, it's coming back, it's taking it out, it's coming back. It's going out, it's coming back, and so on. We hope for movements equivalent to the size of those areas and what the price is showing me, because there are also many people who have the habit, again, of seeing the price make deep retracements within the area, and as soon as it leaves the next area, they want to chase shorts immediately from here, just one after another. When the price in the previous structure showed them a deep retracement, then they shouldn't expect the price to start doing that. Sometimes it does when the movement is very linear, but have that multi-time frame mentality, and when the price starts to make a double bottom, all that has to go higher to properly fill their orders to continue the major trend. Temporality. Then here is a double bottom from that area over there, and it reached the 50, but at the same time this area over here that we were talking about, that responsible one, this causes us the break with the body. Finally, it's responsible, and at the same time, in this area, the price had returned to its 30% to make a continuation. Tap, double top, continuation, an important area for the current order flow in terms of being bearish, right? And so we are going to apply the same logic. If I want to go short, then I'm going to wait again for the price to start, telling me that the bullish is going to stop happening. And on the contrary, the bearish starts to gain strength. So the price here did what it did, where we came from a continuation top, double bottom, and it goes here again. As we saw back here, the sweep on the responsible one. Look how repetitive this gets. It even becomes boring. Here we have a rejection. It came from this price here to make a pullback. Barely hits the responsible one. Doesn't even reach 30 of this and then goes away. Now, if it pulls this out, but starts having to reject those rejections. If I have a price magnet or something, without mitigating the price, it's making me rejections. The rejection has a certain function. I can also find a way to unload a short as well, because I'm reading what the price is telling me. I'm based on data and functions that most of the time prove me right. So I can look for a short that shows me it reaches the 50, the responsible one, and now it remains at the tab and the double bottom, and we're off. Now, until now, I am bullish. I reached this important area for the bearish, and at the 50 of the entire swing area, I start to observe price makes a pullback to this previous area. I am still bullish. But sometimes I start thinking, okay, it hit the 50 with body and all. No, it wasn't precise with the 50. And additionally, it didn't manage to touch this candle pattern properly. It didn't mitigate it well. It didn't reach its target. See? It didn't lead to any of that. So I start to get an idea that we have a way to go lower. The price does what I like it to do, make another push, make an attempt, and fail to do it, because it already shows me it doesn't want to make a new high. The price is the same here with these ones. It made a push, failed, and it starts to take away all this. There is still the possibility of a double bottom. That possibility exists, even though this area didn't give us a continuation. It's not a really strong area by order flow, because it hasn't given us that continuation we look for with a tap. Now if it reaches the responsible one, at the fractal this in seconds responsible, and the 30% local tick gives a good reaction and starts to accumulate here, but fails in that double bottom distribution, now gets me the first up to the responsible one, the double bottom. Now that we have tap double bottom, I still have that possibility. I haven't gone bearish, because I'm afraid this will go bullish. I hope the break of this, again, as we expected here, it broke perfectly. What does this become? In the responsible for breaking a responsible. Confirm flow changer, ultra confirmed. Bullish failure, bearish flow changer. Responsible for breaking responsible. Coincidentally, we arrive later at that specific point and then leave again. And again, trap area, once more. See why this area is not a responsible one. Because it is generated after a break. It is the first area that will be liquidated as a target, and is the area that usually gives a false flip. It false flip takes it again. This does not change the structure. It is simply an area that will be liquidated in both directions most of the time. And so, the price keeps moving with the same concepts, always with the same information. It is simply about ignoring the noise, not feeding the FOMO, letting the price validate areas, making its pullbacks, and starting to do what we like. The tabs, double bottoms, order flow changes, seeing how the responsibles interact, and that's it. So now what happens? The price came around here to the origin of this area that we were looking at, which I think was in confluence with 70. And this responsible fractal was where the origin of that area was. It touched there and made this impulse but couldn't take out what door it couldn't open. The responsible varies all of this here. The responsible for taking out the swing low. Look, it came to him but couldn't take him out. Therefore it didn't open that door. And we went well. Now we've started reaching the swing area, the entire area that we have, and the price in this tap didn't touch its 50 if I'm not wrong, which is why I was still. Somewhat varies. So here, there is a candle pattern, a consolidation, the price makes an impulse, an attempt to go varies, again fails, and it takes this out. So you see, this is kind of the first sign of a possible pullback or reversal, always that failure to set a new swing. It's something very repetitive. We reach this responsible person that we already know what they are responsible for, and then we leave again and come back here. It got to a point where I had a limit order, and I removed it in the end, because it's a short around here. I took profit almost reaching it, so I said, well, I've taken enough, and I didn't want to place this limit order, but this one was from the book, as I like, that we had. This candle pattern, this origin, that didn't have its 50 mitigated here. So I was looking at that first, had seen this too, like the structure change that happened there, and the price came and gave a reaction there, first at that 50, and then it kept falling. So when I saw in seconds how this was acting here, see that I ended up shorting to that origin, touched them perfectly, went 1 point more, but was at 17, where I had the limit. And well, I regret not leaving the order. What happens here? Candle pattern around here. We have the responsible for the candle pattern. It comes to him. It starts to go. Around here there was the fractal, the responsible in seconds. When the price is very volatile, it won't leave us candles with body or anything. This in seconds was a small structure around here. There was a fractal holding the price. So the price is driven by this. Responsible comes here, sweeps this around here, touched the responsible also in seconds. And from there, it started to become also responsible for removing this fractal from here, responsible. And from there, the price starts to leave. The price comes here, does a tap on this, and from there, it continues. It starts to make a couple of rejections from the levels of this area that has not been validated so far, because the price never got there to give a continuation. So it's a good target to return to our validated area. Around here, comes here, does the sweep of the first tap. From this area, there's the double bottom, or if we want to see it from the responsible, you can also see it from where the setup started to form. So there's the tap and the double bottom, and it starts to build a quite bullish order flow. Now the price does a pullback too. There it is. Look at how to identify false flips again. When you reach a point where someone is holding the price, setting up a direction, and you haven't broken it yet. I avoid shorts. So, what are we expecting here? For this responsible party to be broken. What are we expecting here? For this responsible party to be broken. Here it didn't break. The price kept moving. Then it creates this new swing for us. Go back to 50. Fails to give a high. What can be taken in the event of a failure? That low from that displacement leg catches a perfect tick. Now comes to test the bearish entity. Tries to continue. Doesn't manage it. He starts taking this, and he ends up taking the entity we have left. Entity. And break entity. We break swing. We now have a new swing. And that's how I go. Closing time. Super algorithmic around here. I made a purchase to finish. It was just 10.50. I made a purchase to finish this delivery because it works very similar to the opening time, and filled the target with 1. And it soon gave them. Immediately arrived here. This origin now returns here to 50, where the responsible is responsible, since he has a smaller one included, but I take the one that includes. It was at 50. It went here, and now market close. So I hope it can serve you, but that you delve deeply into that reading of what the price is doing in detail with what I teach you. And it will be an arduous study process. But once you understand the price, you will see the peace this will bring to your trading. You will have excellent freedom in terms of when I trade, that I can come at any time and I will find something, and if I don't see it, well, I don't worry, because the next day I will surely find something. Very rarely does the market do something too strange. When you understand this system, you can practically understand everything all the time. So I hope you like it a lot.